Thank you for joining us. This is Business Incorporated. I'm Chimezie Obi Iwago. On the program today, Nigeria to unveil its new national carrier in London. Ethiopian Airlines makes historic flight to Eritrea. Plus, South Africa's consumer price index rises to 4.6% year-on-year in June. Let's get the show started now. And starting off with the markets, investors at the Johannesburg Stock Exchange traded cautiously ahead of the release of the country's inflation number. The JSE index was down 0.14% at intraday. South Africa's headline consumer inflation quickened to 4.6% year-on-year in June from 4.4% in May. On a month-on-month basis, inflation rose to 0.4% in June from 0.2% in May. And here in Nigeria, the index continues to take a beating following political uncertainties. The index was down 0.53% as at midday. Egypt was up 1.06%, while Kenya closed 0.68% sunny side on Tuesday. In the Middle East, it was mixed bag as the markets in the UAE were both up at intraday, while others were down. Abu Dhabi was up 0.35%, Dubai up 0.64%, Qatar and Saudi were down 0.02% and 0.13% in that order. Let's move over now to Europe, where shares rose in early trade, carrying on the positive sentiment seen overnight on Wall Street. There are also loads of market news on the wires, and Ulrich Batz, my colleague in Frankfurt, has quite a lot to tell us. Hello, Ulrich. Good afternoon. Good to see you.
Yeah, good to see you as well. Thank you.
Now, the EU signed a virtually no-tariff trade deal with Japan on Tuesday. How significant was this deal for the markets?
It's hugely significant. The market didn't really welcome it with appropriately higher share prices, but it'll help EU growth and it'll help Japanese growth more than TTIP. That's the estimation. TTIP, that free trade deal with the United States that fell through, that landed on the back burner. And it's expected to save the EU industry about 1 billion euros a year. That's huge. And the EU Commission expects that trade with Japan, or between the EU and Japan, will increase by about 25% in the next few years. As the agreement step by step takes hold, the tariffs won't be eliminated on all the items immediately to the full extent. There will be a transition period, and this will also help key industries like, for example, the German car industry. We have a lot of Japanese car manufacturers that import not only to Germany but to Europe, and European manufacturers will slide into this gradually. So that deal is seen very positively, not least as a contrasting successful project vis-a-vis President Trump's trade policies over there in the United States.
Now tell me, what's the word on the trading floor and trading rooms on the news of Google getting slammed with $5 billion fine by European Union antitrust agency?
Yeah, it's an amazing sum. Just to put that in context, $5 billion, 4.3 billion euros, that's about the size of the contribution to the EU budget by the Netherlands, one of the economic powerhouses of the European Union. It's seen as something that Google can digest quite well. Google has tremendous profits. Last year, it made about $13 billion in profit. So 5 billion, yes, it can digest, and it has massive reserves, about 90 to 95 billion in reserves, cash reserves. But the EU Commission isn't just levying the fine; it's telling Google to mend its ways. And if it changes its business model appropriately, there is worry, of course, from the corporate side, from the shareholder side, not from the consumer side, but worry looking at the company interest side of it, that profits will go down in the future.
Let's see how that plays out for that company. Okay, let's look at some of the economic data coming in. Eurozone inflation for June, higher at 2%, while UK inflation data was set to disappoint. Is this a major trading theme today?
Yes, and I think not so much in the Eurozone or in the European markets here. Shares are generally higher on the expectancy that interest rates will remain in the United States on track, and positive remarks by U.S. Central Bank Chief Jerome Powell. The DAX is on its way up, but you know, for Great Britain, the lower inflation was lower than expected, was good news for the FTSE. Because the pound dropped on that news. The expectancy is, with inflation coming in under expectations, that the Bank of England need not necessarily raise rates at the next meeting. And that put pressure on the pound, further downward pressure, one must say, on the pound, and being good news for the stock market. But, you know, all in all, showing that the situation in Britain, with this Brexit looming, with all the uncertainty in the market over that, is not a good situation.
All right, thank you very much for your time, Ulrich. Enjoy the rest of the day and hope to see you tomorrow. Moving now to the Asian market, where shares closed mixed today after firmer gains seen earlier slightly faded, although investors were still assured by the upbeat remarks from Federal Reserve Chairman Jerome Powell during his congressional testimony. In Tokyo, the Nikkei 225 rose 0.43% to close at 22,794 points. In Australia, the S&P ASX 200 added 0.67% to end at 6,245 points, with healthcare and materials the top performing sectors. Other major markets in the region finished in negative territory. Over in Seoul, the Kospi gave up early gains, closing lower by 0.34% at 2,290 points. Hong Kong's Hang Seng Index reversed gains to slip 0.26%, with energy and materials leading losses. China stocks extended losses, with the Shanghai Composite slipping 0.35% to 2,788.44, marking its fourth straight day of declines. The smaller Shenzhen Composite slid 0.75% to end at 1,588 points.